Hi, welcome to the Market Alert for Thursday, 20th of December 2018. So, yes, Powell has broken the market. Interest rates increased yesterday by 0.25% to 2.5 from 2.25. And as you can see, zero hedge dominated by references to Jerome Powell, the Fed chairman. And if we go on to the second page, you'll also see other news relating to interest rates. Big funds begin liquidating as panic grips the loan markets, becoming more expensive to obviously borrow money. Coming crisis there as well. And let's have a look. There was a few other ones as well. FOMC delivers not dovish enough rate hike and cuts outlook and future hikes by one. So it looks like they're going to continue to move rates high going forward. And here you can see the Dow down 900 points. We'll look at that in more detail in just a moment. But we'll start off with the pound's reaction to all of this. Start with the daily chart. Not a lot really. The dollar obviously would prefer an increase in interest rates, but obviously this is not to be the case going forward by the looks of things. And the pound higher on this overnight. But yesterday the pound down. I don't know if it had anything to do with Corbyn's comments about May, referring to her as a stupid woman, whether that had any impact or not. But the market seems to have gone down at the time when it all started flying around social media. And then it recovered until we had the announcement by Powell. It went straight back through the 200 bar moving average, but has since started to move back higher, and it's just currently back through the 200 bar as prices are struggling with the 126.50 level, the blue line there at the moment. Need to close above this. But in the daily chart, as I say, we're starting to move back towards the upside. The dollar is going to come under some pressure. That said, all currencies are being devalued, which is quite odd given the relationship between the two. Just go and look at any chart and you'll see struggling, obviously, apart from the US dollar, which is the stronger of all of the basket case currencies, frankly, all devaluing because of the amount of debt that there is in the system. Simple as that. Retail sales today, these are forecast to show higher. Seasonally they will be higher, and the same for January as well, but that's about it. I've also got the MPC official bank rate votes, all 9 agreeing to keep rates unchanged. They can't increase interest rates. The debt is too great. It's a myth. And the interesting thing is there's been no real recovery. There's been a lot more printing of debt and borrowing of debt. And they can't even raise rates because they know it will cripple the economy. So, it's not rocket science, this stuff. I mean, it's blatantly obvious what's going on. In the US, what they're doing there is, as I said yesterday, they're raising rates so that they can bring them down. And talking of things going down, yesterday the Dow traded higher initially, then closed below the 2388, came back through this and then moved lower. And when you look at the detail, now you can see the reaction. Great trades up to this point as well, great volatility, and then bang, hits the wire. We're straight through the 200 bar moving average. We attempt to come back. Prices fail. Look at that for selling there. And you can see the selling here as well as they bring prices higher. Get stuck at the 20 bar moving average. Psychological level as well of 23,800. And then it's straight through for this market. Prices sideways. And then you get the saucer effect, as it's known in the trade, where you'll see prices rounding over, or an inverted saucer in this case, and then prices continuing lower as well. But a huge range for yesterday, lots of points on the table. And again, beautiful here because we're coming off that 200 bar moving average as the market moves higher. Even in the first case scenario, if we just look at the low for yesterday up to the first part of the high, 267, we then retrace off the high back down to the low of the test. It's a 105 point range, and then again from here up to the high, 83 points, and then the sell before the waiting for the news is another 141, and then of course from the high of here down to here the range is 890 points for the Dow, and this is bad news. This is bad news going forward. The old mantra of buying the dips seems to have gone off the radar now with this market. Meanwhile, in Bitcoin, 2 days of buying, but look at the selling that was around yesterday. Profit taking at the 3843 level, where the previous selling was before. So in order to move higher, it's got to drive through this area, and it will stop at this one, the 76% area, if it does so. Okay, that will do it for this one. I expect more weakness in the Dow. I expect the pound to remain sort of sideways at the moment. Keep an eye on the dollar as well, the dollar index. Always worth a look at there as well, and see how things pan out. And with that, thanks for watching. See you in the next one.